Good afternoon, everyone. Welcome to How the Political Landscape Affects Healthcare. And again, welcome to the GIS 2019. Looking forward to speaking to you about this meaty topic. We've got some great knowledge and experience on the panel. You know, from a format standpoint, we'll be talking for about 30 minutes or so, having a good, robust conversation. Then for the last 10 or 15 minutes, we'll turn to you for some questions. So please take a lot of notes. Jot down a couple of questions, and we'll be happy to field those at the end. So I'm going to start with introducing our distinguished panel from left to right. We've got Brendan Dunn, who came from Washington, D.C. Brendan is a partner in the Public Law and Policy Group at the international law firm Akin Gump. Prior to joining Akin Gump, he worked in the United States Senate Office at the Judiciary Committee, the Finance Committee, and for the Senate Majority Leader Mitch McConnell. During his decade of service on Capitol Hill, he worked on a variety of issues, including healthcare, tax, trade, retirement, and financial services. Earlier in his career, he worked as a lawyer and consultant for clients attempting to navigate the legislative and regulatory efforts around the Affordable Health Care Act. Please welcome Brendan Dunn. We have Ross Baker, who hails from Chicago. Ross is a senior partner at Mercer, Ross has been with Mercer for 24 years in a number of leadership roles, running the Mercer Chicago office, the Central Market Growth Team leader, and is currently leading Mercer's North American insurance vertical practice. Ross also spent 9 years with Oliver Wyman, Mercer's sister company focused on corporate strategy work. Please welcome Ross. And then we have Jeff Smedsrud out of Minneapolis, who just actually came from D.C. Jeff is the co-founder and chief executive officer of Pivot Health, a provider of ancillary insurance products, and co-founder of Healthcare.com, a leading search and comparison engine for individual health insurance. Both are part of Healthcare, Inc. He has started several insurance companies during his career and has been active in public policy discussions about healthcare reform. Welcome, Jeff. All right, so now that introductions have been done, we'll say our cruising altitude is at 33,000 feet. You folks can take out your portable devices, and we'll go ahead and recline our seats. Does this thing's recline or not? I don't think they do, so we'll play it straight up.
I'll try that.
You know, when I think about the current state of healthcare, a few bullets come to mind. I jotted down a few here just to talk through those. Healthcare price growth significantly outpaces inflation. We've got market consolidation and expensive new drugs and treatments are driving a lot of that cost. We've got consumers struggling to afford the quality health care they need, right? Innovation is happening, but it's mostly being driven by startups and not at the carrier level, which to me means that consumer and employee engagement is challenging, right? And then from a legislative standpoint, we've got the ACA Cadillac tax, we've got ACA employer mandate, out-of-network surprise medical bills being looked at. We've got HSA reform, we talked about that earlier, drug price reform, and then, of course, Medicare-for-All on the table. Interesting stuff. So I thought we'd start with costs. That seems to be a topic of major attention right now. So Ross, I'll start with you. Given the rise of medical inflation, do you think the government has the ability to stem this trend, and do you think employers would buy into a government program?
Scott, well, I think the issue right now is, many of you read in the papers, medical trends at about 6.1%. So large companies are trying to figure out how they can adjust deductibles, move costs around the system, and they're still not moving the trend curve as far as they want to go, even with HSAs in the marketplace. So where they've really headed, and I'm sure we'll talk a lot about this, is on the innovation side of the house. They're looking at these small startup companies. We spend a lot of time with these startups looking at sort of how to solve for disease management, sleep, weight loss, all kinds of different programs. So a lot of things are happening there. That's how large employers are driving costs. And back to your sort of question around government and Medicare-for-All, large employers right now are moving ahead really rapidly. They're not waiting for the government, nor do they believe that the Republicans and Democrats will actually ever get together to solve a sort of a comprehensive program. So they're not waiting. Their CEOs, their management team, their boards are really pushing those organizations to be very directive on how to solve for very specific issues around their employees' health. And also what they're looking at is productivity, how to get their employees productive. And health has a lot to do with it. So that's where it's kind of headed. So to be very frank, large employers are not, they're addressing the cost. It's a big issue, but they're not waiting for the government to solve for it.
Right. I would agree with that. And then Brendan, from a political standpoint, businesses across the healthcare space face legislative jeopardy of varying degrees. What do you think the likelihood is of legislation impacting pharmaceutical pricing and intellectual property in the short term?
I think that this is a will and way question. I think that the will is there to do something on pharmaceutical drug pricing on a bipartisan basis. I think it's important to go back and you look at when we did this in the previous Republican administration with Part D. That was, I think, a more traditional Republican administration, solicitous of the views of the pharmaceutical industry. It was about providing access to people, but without, I think, beating up on the industry. And you actually had a solid core of Republicans, if you remember, who were pretty opposed to Part D. They had to have their arms broken in order to get them to finally come around and vote for it. I think today it's fair to say that President Trump is a little idiosyncratic from a Republican perspective. He, at times, sounds more like Bernie Sanders on when it comes to pharmaceutical pricing, and there are a lot of ideas out there. I think you see a change. Obviously, the Democrats are already there. You look at this, and this is not a comprehensive list. You have the existing drug rebate rule that's being considered. You have direct-to-consumer transparency, which is almost finalized. You have pay for delay consideration, which I think you're all going to hear from Senator Grassley, chairman of the Finance Committee, tomorrow. I think it's tomorrow.
Right.
He's supportive drug reimportation. He's supportive. I think that it seems that where the gigantic fight would be on international price indexing, I think that seems to be where the pharmaceutical industry is really drawing a very hard line. You're seeing that manifest with Republican opposition. But what you have, and then you also have this issue of the treatment of biologics in the trade agreement, which is a side issue. It's not specifically about drug pricing, but it impacts the industry. And Congress is going to be considering at some point, probably this year, the revised NAFTA. So I think that there is a will. Whether or not, having been up there, you see it routinely that just because you have 75% of people there agree that we ought to do something, it somehow, for one reason or another, doesn't come together. And so I think that the desire is there. Whether or not it manifests itself, I think, remains to be seen. If it does, it's probably as part of some huge legislative vehicle toward the end of the year.
Sure. Interesting. Jeff, thinking about things from a consumer perspective, how might proposed legislation impact consumer choice and perhaps cost in your mind, if you'd like to speak to that?
We appreciate the question. I, too, believe that consumers are not going to wait for government to step in and solve problems, but understand there's such a tremendous divide right now between Republicans and Democrats in terms of moving anything of consequence. From our perspective, consumers are transforming healthcare every day, and technology and transparency and new media is changing the face of healthcare very, very quickly. You're seeing a lot of startup companies. You're seeing new ways of insuring people. You're seeing new ways of underwriting people. You're seeing new ways for people to band together to purchase plans. So I think innovation and technology and insurtech is changing insurance for the good and possibly bringing down healthcare costs. And the government is falling farther and farther behind, and regulators need to understand some of the dynamics that is changing healthcare and changing insurance.
Good answer, Jeff. Do you get a sense that the carriers are starting to innovate as well?
I think the carriers are beginning to innovate. My opinion is that if you go to the CEO of a large insurance company and say, I'm going to hire this 22-year-old brilliant technologist and pay him $300,000 or her $400,000 a year, that insurance company is not going to do that.
Right.
If a startup, we bring in a 22 or 23-year-old and say, we'll pay you $30,000 and give you 1% of the company, which is not worth anything at the time, they're going to do that all day long. So carriers have been very slow to meaningfully adapt to consumer change. And they're getting a lot of push from incumbents or a lot of push from startups. But carriers have a lot of cash and are starting now to buy some of those insurtech startups. And that's leading to a lot of interesting times.
I would assume that consumers are starting to push for innovation through the carriers as well.
I believe so, yeah.
Gentlemen, would you like to speak?
Yeah, I would just add, I totally agree with what Jeff said. From our perspective, large employers are very disappointed in the large insurance companies right now. They've been way too slow to act. They haven't moved on innovation. And we have an innovation group. We have 2 innovation hubs at Mercer, one in Hoboken, New Jersey, which you wouldn't think is an innovation place, but it is, and also San Francisco. And we have large employers come to us and say, hey, we have a specific problem to solve for. And our young 25-year-olds, which are amazing, are going out in the market, finding solutions, building business plans, hooking up with other startups to solve for these very specific things. And we have these conversations with large insurers, and we get answers like, we're still working on it, we're 2 years away. And quite frankly, the market's already accelerated way past them. I think the challenge is going to be, and I think they've been slow on this, is when are they going to start buying some of these startups, right? And how to evaluate them, because a lot of large employers are concerned about, I'm going to invest all this time and money in these programs or these startups. Is there an ROI? Is it actually moving the needle? And so that's where a lot of the sort of, it's a little bit of a gray area. It's either happening or not happening. And I think large insurers are just too conservative. And they kind of wait for the proven thing to happen. But the proven thing is already happened and somebody else has bought them. So I think that's some of the challenges they need to think about.
Yeah, I would add to that point that there's a certain amount of regulatory uncertainty about different ways of using data, using genetics, using information and actions of consumers, whether or not that should be allowed, how should it be allowed, who should control it, who should regulate the uses of your genetics, the uses of your data, giving you discounts if you are more educated about healthcare, having a little device inserted into your wrist so that you can get real-time readings on your biometrics. Who controls that? Who does it benefit? Who could it hurt? And it will bring down cost for many, many people. But there's this uncertainty about how far to invest and how much to invest, because much of it is unregulated at this point.
Seems like a rather moving target. Let's tackle Medicare-for-All. I think that's an interesting topic. And Brandon, I'll start with you on this one. There's a great deal of focus right now on Medicare-for-All. Wall Street seems to be not giving it much credence, obviously. What do you make of the effort?
It's not happening now. I think, obviously the Republican Senate and President Trump are a backstop. But I think that, going back to that initial question on drug pricing, it's not about the drug pricing debate. I kind of view as, an initial skirmish in a larger war that's been going on since, pre-ACA. And we're having a discussion about access and cost. We went through, you look at large employers, we went through the ACA, and the large employers, ERISA plans, they were very successful, I think, in saying, look, just kind of roughly speaking, leave us out of this. we understand that around the edges we're going to be impacted, but it's the smaller guys who have problems with providing insurance coverage to their employees. We're already doing it, and we're providing good coverage. And that was over a decade ago that we had that debate. And I think in the meantime, I was looking at something just in preparation for this, and I saw, it was kind of from a left of center publication, and they were complaining. I think that the large employers get hit on two fronts here, which are contradictory. On the one hand, they are the haves in a debate between haves and have-nots, heavily subsidized by the taxpayer, right? The single largest tax expenditure left in the tax code is about $600 billion, depending on how you slice it, sitting out there because of the healthcare exclusion. So they're the haves. At the same time, you have people saying, well, yeah, they're getting coverage through large employers, but the coverage isn't any good, the deductibles are too high. And so I think that that's the argument that's going to be coming at large employers. The reason I start with large employers to answer this question is that the principal argument that the Republicans are settling on when it comes to their opposition to Medicare-for-All, the principal argument is you're going to take away everybody's health coverage, and they already have health coverage and they like their health coverage. The Democrats are saying they have their health coverage, but not enough people do have health coverage. And the health coverage that these guys have it's not all that it's cracked up to be. So is it something that we have to worry about today? I think the answer is no. But I've seen too many times ideas that are considered out there coming to fruition 5 or 10 years down the road when the politics lines up. I think a good example would be what happened with the ACA. The ACA was kind of inconceivable for I guess about 15 years. Is that right? 94 Clinton Care to 2009. So about 15 years. And it was inconceivable until President Obama won the election and had really significant majorities in both houses of Congress, and then they were able to do something. So I think that I view this as something, if you're opposed to Medicare-for-All, and we've seen that, obviously the insurers, the hospitals are coming out hard against it. I think that there's some jeopardy there. I think it's downstream jeopardy, but it's real jeopardy.
Sure. And thanks for your comment on large employers. And Ross, this might be a good segue to you since over 50% of all insurance is purchased through employers, right? Can you give us a perspective on Mercer's large market, on how they feel about the prospect of government-mandated care?
I think many discussions were with our large employers. It's all about the financing, who's going to pay for it, how's the system going to deliver care. Will deliver care at the quality that they want. Access is really important. And so I think a lot of large employers that we work with are they're wait and see. I think they're not waiting. Again, it goes back to my earlier comment. They're moving forward, trying to solve for it. So they're not waiting for the government to come into play. They are influencing in Capitol Hill on their perspective what needs to happen. But again, I think large employers they want the market to create the opportunities and to make the system more efficient. The other thing that's interesting, my wife is a physician, and so is my brother-in-law, my father-in-law, and access and not having enough physicians is actually a real issue. And large employers recognize that there's not enough internists out there, that some of these internists have a patient load of 2,500 people. And you're not getting quality care. So a lot of large employers know this, and they're really scared about sort of a Medicare-for-All plan that just makes it even harder to go see a doctor and to take care of their employees. So I totally agree. It will come to a head at some point, but large employers right now they're moving forward.
Mm-hmm. Yeah.
There's a little bit of a changing political calculus in this. The Senate has a Senate Republicans have a tougher election cycle in 2020, so there's a possibility that the Senate could flip to the Democrat side. There's more than a possibility that President Trump could lose. If you take the top polling issue, or the top issue to Democrats in the 2018 election, healthcare was the top 3 in 83% of the voters' mind. Of Republicans, healthcare was in the top 3 in 19% of Republican voters. It's a great issue to campaign on, healthcare reform, which tends to favor the Democrats at this point. And the wild card, the new political calculus, in my view, is you have 50 million people now increasingly as part of a gig economy that aren't working for large employers, sometimes aren't working for small employers, are working for themselves, have never bought insurance in their lives, and they're saying, this is ugly. This is hard. This doesn't work real well. See, you have a lot of things at play. Bottom line, I don't think Medicare-for-All is going to, nothing but sound and fury right now, but
Right.
could happen.
So Jeff, do you think a Medicare-for-All would end private insurance for individuals?
No, I don't believe it would. I think you'd have a Medicare supplement for all market. And the insurance industry has done quite well for many, many years in providing Medicare supplements. Consumers will always demand choice and change and control. That's the lessons from technology and transparency and choice, control, opportunities to affect costs. The insurance industry is not going to go away. It will change, and it needs to.
Interesting. So let's go to legislation a little bit. Jeff, I'm going to fire another one at you if you don't mind. How might proposed legislation impact consumer choice?
There's legislation right now. One of the issues we're seeing with the Affordable Care Act that serves 20 to 30 million individuals that buy their own coverage is it's bifurcating in such a way that if you are subsidy eligible below a certain income, ACA plans make all the sense in the world. If you are not subsidy eligible, family of 4 above $85,000 a year, which is not exactly rich, ACA plans are increasingly unaffordable, which has led to a growth in short-term medical plans and other alternatives, which the Democratic side wants to suppress as much as possible. And it's also led to a different dynamic, something most people haven't heard much about, called Christian and faith-sharing health plans. There are now some 2 million people enrolled in these plans, up from 130,000 when the ACA went into law. 2 million people sharing health care costs, 10% of the individual market almost, totally unregulated by state regulators, federal regulators, and you think, well, that can't happen. But then you think about Uber and Airbnb and things that came out of nowhere that to this day are largely unregulated. So there's a lot of change. Consumers will always find a way to reward those that give them choice.
Thank you. Brendan, large employers that provided health insurance to their employees were, by comparison with other stakeholders, left alone by the ACA. We are now a decade past ACA, right? So how do you think the issue of employer-sponsored insurance will be treated in subsequent efforts in healthcare reform?
Yeah, I mean, I think kind of going back to what I was talking about before, the large employers, I think, were pretty successful in keeping the ACA away from them. The ACA was, tax credits for the exchange, a big Medicaid expansion, some insurance regulations, and then some effort to address cost. And it's my view, kind of having lived through it, that effort to address cost was really given short shrift. That in the debate between coverage and cost, coverage won out. In the meantime, this issue of cost and coverage has continued. And as Ross was noting, the employers are trying to work their way toward addressing healthcare costs for their employees. I don't know. It's clear that the private sector is doing their work in this space. I don't know what the federal government is going to do to address cost. But I'm pretty confident that if we don't get our arms around it in fairly short order, we just went through tax reform. Tax reform is a one-time event, and then you immediately start working on the next round of tax bills. We got the ACA done. We've been debating the fallout of the ACA since 2000, for the better part of a decade. I don't know that we're going to have to the large employers are going to have lawmakers revisiting everything that was said in the ACA debate. What was said in the ACA debate was, leave us be, we provide coverage, it's good coverage, we've got it under control. And we'll see if that holds in the next unfolding of a debate over healthcare reform. For the reasons I expressed earlier, I think it's going to be harder. Mm-hmm. And then we also can't leave aside that this debate, when it happens, is going to occur in a very different fiscal context than the previous debate. We're now staring at $22 trillion worth of debt. We have Medicare is insolvent within the decade. Social Security by 2035. We're going to have the tax reform, everything on the individual side expires. We're going to have to come up with revenue. The government's going to have to come up with revenue to address all of that, right? They're not going to let the child tax credit expire. And you think, okay, well, where's the money to do all of this? Well, the money is in things like the healthcare exclusion, health insurance exclusion. The money is in the things that we attempted in the ACA that ended up getting punted off, right? The medical device tax has never come online. The HIT tax has never come online. All of these large employers, at the same time that we're having a debate over health care, are also going to be fighting, rearguard action to preserve the corporate tax rate cut that they got. So, which is, keep in mind, we just did a corporate rate cut on the corporate side of the tax code that reduced it from 35 to 21%. Each point, roughly $110 billion, right? So you let that rate drift up from 21 to 26%, you kind of get yourself about $600 billion worth of revenue. So I think that the large employers are going to be on the block for a variety of reasons in the next, 2, 4, 10 years.
And it seems like the large employers have a little bit more of an advantage, a little more leverage. The smaller employers are extremely challenged. Would you like to speak to that at all?
I don't know that, the small employers, you think of your small employers are your membership at the NFIB, which tends to be pretty, have a great deal of political SWAT up on Capitol Hill. So, I'm of mixed mind on this. I think that the large employers, we're reading, there's my hometown newspaper in the Washington Post, right? There are articles about, corporate America trying to come to grips with a, increasing rejection of kind of the fundamental precepts of capitalism. When you're in an environment like that, where, you have leading members of the Democratic Party running for president saying, yeah, I'd be fine kind of going to zero and having everybody move out of the private insurance market and go into Medicare-for-All, that's a new space. That's a new ideological and policy space than we're accustomed to. And I think that I don't know what's going to happen, but I think that there's a great deal of uncertainty, for sure, in how this all shakes out.
Agreed.
I do agree with Brendan. At some point, the elephant in the room, as we all know, is cost. And at some point, cost has to get addressed. The percent of claims over $2 million is growing by a CAGR of 25% a year. Wow. Now, it's only like 0.2% of claims are excess of $2 million. But anything, we have smart actuarial students and others here, anything that grows by 25% a year leads to an enormous amount of redistribution that's going to have to take place in very difficult conversations. There was a person in Iowa that was sometimes referred to as the $10 million man because he was a hemophiliac that had medical bills that were in the range of $10 million, and different insurance companies wouldn't want this individual in their plan, and that individual touched 3 different insurance companies. Their pool and base of business wasn't large enough to have one individual, and you have to have some reinsurance mechanism that goes into play. Those issues are swept under the rug time and time again, but at some point they have to be dealt with, and that's going to be hard politics.
Are we going to stop care?
I don't know how we're going to deal with that. We spent an enormous amount in the last 10 days of people's lives. I wrote a column once that said, is it time for a rational debate about rationing? Nobody ever reads what I write until that headline. It's a difficult issue, and who decides?
Yep.
There is a famous story of someone called the Popcorn Girl in Virginia, 2.5-year-old who choked on popcorn at a movie theater. She was uninsured. Her parents wanted to keep her alive. The providers said there's no point. The payer, the hospital system, said it's our decision. The courts took it up. She died. It's an unanswered question. Who decides, the parents, the provider, or the payer? And those are uncomfortable questions.
Absolutely. Jeff, what are some of the larger issues likely to impact buyers of insurance that are really not yet on the radar of regulators? Anything come to mind?
What's not on the radar?
Right.
Some of the things I think I just mentioned too often are not on the radar. Some of the questions about genetics are, there's a new insurance company called Usurance that's using epigenetics. You can get a swab in your cheek, and it can tell you what your genetics say your age really is. So they can swab and say, Jeff, you're really not 60, you're 55, so you can buy life insurance at a lower rate. Good, bad, how regulated? Should that be on the screen? Root is changing the automobile insurance industry by having a device in your car that allows you to real-time see how you drive, how much you speed over the speeding limit, all of those types of things. So I think a lot of technology change is not yet really on the radar in terms of what will be allowed, what should be encouraged, and will large companies benefit from it? Will consumers benefit from it? Will governments say, no, we don't want to go there?
Yep.
Interesting. Might be a good time to pause a little bit and field some questions if we have any. Does anybody have some questions they'd like to ask? Got one here?
Hi, I work in self-insurance and for groups, and I want to know why I keep waiting to hear from the government that somebody's going to talk about price transparency. To your point, I have a person on one of my plans right now. She is 21 years old and is taking a drug that's going to cost $2 million. There's only 300 people in the world that are on this drug. We, I think, as insurance people, do ourselves a great disservice by not talking about the fact that some of these providers They all need to make money, absolutely. But when they're charging 1,500% above Medicare, and we are not marking at a value-based or a reference-based pricing, how are we going to manage cost? Our people, we buy milk and we look at our price. The average person has no idea what their health care costs until they get that bill or they get that balance bill. I wish, I'm waiting for the government or somebody on Capitol Hill, and every politician I talk to, I'm waiting for them to say, let's have a conversation about value-based pricing and reference-based pricing, and maybe we need to set the bar a little bit higher. But I've seen mass migration into the self-funding space because we're the only ones that seem to be, talking about it. So can you all talk about what you're hearing?
Great question and a big issue.
It's probably your.
I'll point out that you're starting to see the infancy of reference-based pricing in individual health markets, and an interesting discussion about what really is the value add of networks when you have a reference-based price set by Medicare and you can pay 125% or 150% above that number. Part of the issue becomes for those in the insurance as an agent and broker is the limitations on how much advice and help you can provide that insured or customer of yours about the efficacy of the medications that they're taking, whether or not there are lower cost alternatives. But it's the difficult issue that the hospitals don't want to cooperate with. The pharmaceutical companies are not cooperating with. Eventually, I think they're going to have to. But it's it's one of those difficult politics. Yeah, but I would imagine more of your, quote, healthier groups are more likely to self-insure than smaller businesses with a number of less healthy individuals. And the market does what's best for the market. And that's why sometimes efforts like ACA, it bifurcates down until only those not advantaged by doing something else stay in that market.
And I think you are seeing some action, I think, at the federal level, right? The legislative effort on balance billing, and then the regulations on direct-to-consumer price transparency in the pharmaceutical market. But I don't pretend to be an expert on this issue of balance billing, but they're addressing the legislative efforts on that front. It's not really about transparency. It's kind of like because of the lack of transparency, we're just going to effectively set the price, and that's one way to address the problem. But a kind of broad. I feel like we've been having this debate for 10, 15 years. I remember as a young staffer working on healthcare issues, and conservative groups were always talking about the need for transparency. You know how much a gallon of milk costs? If the gallon of milk costs $5 here and it costs $8 there, you'll buy it for $5 over here. And we've been having this conversation. HSAs, I think, are designed to include some of that, or to encourage some, ordinary consumer behavior with respect to healthcare shopping. At the same time, sometimes it's hard to figure out how much the procedure is going to cost, how much the MRI is going to cost, And, in the end, you might not have your choice of anesthesiologists when you go to the hospital. And so regardless of, whether Dr. A or Dr. B charges more or less, you're kind of stuck with what you have. So it's not a good answer. I think that they're nibbling around the edges up on the hill, and I think the hope is that as HSAs, become ever more prevalent, I know the numbers continue to, the growth curve is pretty significant on them, that people will become more conscious about what they're spending their dollars on.
Thank you for the question. Anyone else? No other questions? I've got a final question then for you gentlemen, and this is kind of speaking in general terms, two-part question. What do you predict will happen in healthcare in the next 5 to 10 years? And what do you think the best outcome could be for consumers? Jeff, would you like to start?
I think we will deal with 3 R's. That consumers have a responsibility, that each of us as individuals have some responsibility for our health, that we have to find some way to reinsure in the broadest possible mechanism some of these very large catastrophic claims, because genetics are genetics. You hemophiliacs are hemophiliacs. I'm a cancer survivor. Things happen. And third, we have to create rewards. In some of the European countries, in Singapore, for example, there's starting to be rewards for continuous insurance. There's rewards for taking better care of yourself. In the large employer market, there's rewards offered to employees. But for those in the gig economy, your insurance is the same if you're 55 and have perfect health, or 55 and actively improving your health, or 55 and doing everything possible to ruin your own health. You're charged exactly the same. And so I think it has to have those fundamental things: more personal responsibility, rewards for correct behavior, and some way to deal with these few but very large catastrophic claims.
Yep, that's well said. I think I would add, I think innovation will also be a big driver in the next 5 years around sort of healthier lifestyles, very focused health initiatives to get people healthier, more productive in the workplace. I think the question that still remains in my mind, not so much from the large employer market, and I totally agree with the price transparency and so forth, but what's going to happen with the small group market in terms of crossing state lines, will legislation allow these small groups, allow a group in Chicago buy a plan in Montana that might not have as many sort of state mandated benefits. I would hope that market would open up, because I think that would sort of push transparency, choice, and drive down costs for small groups.
Good.
Seems to me that the federal government kind of has they only have a hammer here. The hammer is we can try and expand coverage for folks. Effective. Nobody likes to use this word, but I do think that it's rationing. I think in the meantime, you're going to have the private side is going to continue to do its work and muddle through and attempt to address costs so that they can deliver better services for their employees. From a policy perspective, my hope is that the private side gets to some solutions quickly enough that we don't end up going with the government solution, because the government solution is not. It seems odd that you raise the issue of Uber. It seems odd that in an Uber world, we would be moving toward something like Medicare-for-All, where it's, truly one size fits all. There's nothing, it's one size fits all that will address costs by rationing access. I don't think that that's where your average citizen wants to go. And my hope is that the private side and the large employers in particular leading the way will help to get us to some solutions here.
Very good. Well, gentlemen, thank you for your insight and perspective and sharing your experience with us. For what it's worth to the audience, Jeff put together a presentation for this event. If you go to globalinsurancesymposium.com and click on speakers, that PowerPoint is under his profile. Please thank our speakers for their time.
Thank you.
Enjoy the rest of the symposium. Thank you.
Thank you.